Well, this is quite juicy, or should I say quite savory. MrBeast is teasing us with a potential IPO for his chocolate chip cookies brand Feastables, as well as potentially a BeastBurger. That's right, BeastBurger as well. Given this tweet from MrBeast, maybe I should IPO Feastables and BeastBurger while they're relatively small, so you guys could share in the growth. Feel pretty confident we can easily 100x the revenue we're doing, but I don't know if that would make my life too stressful or not. That, of course, was met by an outpouring of support of people blindly saying they would love to invest in MrBeast's food brands, no matter the profitability or the numbers they want in. An equal number of people shouted at MrBeast saying, no, you don't want the regulators in your life, that's too stressful. And then, of course, you have some other people like, well, as long as you do the right thing, having regulators in your life isn't stressful, just do the right thing. So let's try to break all of this madness down, because there are some very important things that we have to understand about the restaurant industry, the ghost kitchen industry, and how all of it works. Let me give you a very simple example. Here, MrBeast tweets that BeastBurger has shared over $100 million in revenue with restaurants across America. Heart face and flattered face. They keep most of the revenue from the orders they fill for us. What a wonderful structure of a tweet to somewhat mislead the audience. Now, I'm not trying to bag on MrBeast here, but I'd like to add some perspective that I think you might find useful. I'm going to make up a scenario here, and then I'm going to show you real scenarios. Let's say that you sell $100 of MrBeast's burgers. And MrBeast says, hey, in order for you to license my name, you just have to pay me 10 bucks. We'll call it a little 10% royalty fee, right? So that's gonna go over to MrBeast right away. But from this $100, you've gotta pay labor, supplies, packaging, rent, all of the things that would go into the cost of actually making the burgers, right? And so all of these costs, let's say, with your operating expenses, your administration, your rent, your advertising for your restaurant, everything included, ends up leaving you with about $85. And then you pay MrBeast his $10. Now you're left with $5. Now you pay taxes to the and the S, and maybe you're left with $3 for every $100 you sell in revenue. Now, when you look at MrBeast's tweet, it looks a little bit different, because here it makes MrBeast continue the image of being the philanthropic creator he is, the giveaway individual. Hey, you know what? The hardworking restaurants keep most of the revenue, right, from the orders they fill for us. That's right. But if their net margins are terrible, and let's say your licensing fee is $10, you might be making 10 bucks for every 3 that they are making. Because that, after all, is the nature of the restaurant industry. Most of the cost goes into actually having the facility, the employees, the chefs, the cleanup staff, the tables, the advertising for the building, everything. Now, the idea of a ghost kitchen model is really interesting, and it looks really complicated when you look at it like this. So I'm just gonna go ahead and make this very, very simple. Basically, let's say that you are a restaurant owner in Los Angeles, California, and you've already got 3 chefs, a couple line folks, a couple servers, you've got a small Mexican burrito place, but you've also got grills, and you're easily able to whip up French fries and burgers. So you reach out to MrBeast and say, hey, we'd love to have some more order flow come in. That's great. But every ghost kitchen produces or manufactures, or should I say cooks, the BeastBurger slightly differently. This is potentially why the reviews for BeastBurger are somewhat mixed. The app has an average review of about 4.3 out of 5 stars. And when you go to Yelp for individual locations across the United States, you tend to be a little bit closer to a 2 or 2.5 star rating. There's a lot of variability in the kind of product that you're actually getting. That's because individual restaurants are simply taking, oh, okay, somebody wants a burger and fries, we'll go ahead and put that into the MrBeast burger bag that they had to pay for. We'll use the burger buns and the burger patties that we had to pay for, the restaurant, right? And then we'll go ahead and deliver that to the person. And MrBeast and the Beast Company, which might be a partnership, ends up getting his fee off of the top line revenue, not necessarily off of the profitability of the restaurant. The restaurant could be losing money on every single burger, but the Beast brand and partnership continue to potentially make profit. Now, if you IPO that sort of franchise model, what you're really doing is you're IPOing a McDonald's style of business model. And in this video, we're going to review whether or not that business model is profitable. And then we'll look at some risk factors. So let's first look at a business that does not do a lot of this sort of franchise model, because after all, a ghost kitchen is really a style of a franchise. You're really putting the work of the actual restaurant on somebody else, but you're giving them the packaging, the branding of MrBeast. You're giving them everything essentially they need to succeed, but they now have to deliver on the quality and the purchasing and the delivering and the fulfillment and the customer complaints and everything, right? Hey, quick interjection. If you like the way that I explain things about finance or money, check out my programs on building your wealth linked down below. They're the only sponsor for this channel. My goal is to help you build your wealth, whether you're looking to make more money as a hustler, whether you're an employee or self-employed, you're looking to make more money by investing in real estate or buying your first home, or you're trying to learn more about the stock market and beginner finance or advanced finance. Check out the programs linked down below. But then again, most people order through the MrBeast app, and that is why MrBeast and the company that's working with MrBeast get their revenue split, right? Okay, fine. So what do you have here? Well, this is cheesecake. This is one extreme of the restaurant model, where you actually have a business that does not franchise. Now, what's really interesting about that is if you go to the Cheesecake Factory and you and your family spend $100 on food at the Cheesecake Factory, how much money do you think the Cheesecake Factory actually makes? Remember in my MrBeast made up example, I said maybe the restaurant brings $3 to the bottom line after everything? Well, let's take a look at this. Revenues of $784 million in the 3 months ending in September, and net income of, oh dear Lord, negative. The Cheesecake Factory actually lost money. Okay, fine then. Well, let's go to the 9 months ending in September, because they were profitable there. So we could actually see hopefully some profitability, right? So the Cheesecake Factory made $46,421. If I divide that by how much money the company sold in terms of product revenue, right? How many times did they sell you that miso salmon white rice lunch portion? So good. Well, $2.4 billion worth. And if I divide those two into each other, you get 1.92%. That means for every $100 of product that Cheesecake sells you, they only keep $1.92. The restaurant business is very, very unprofitable. Let's look at another business. And this one happens to do burgers. This is Red Robin Gourmet Burgers. Hey, I happen to have worked for that company before. They barely have any kind of franchise revenue because most restaurants are corporate owned. In the 3 months ending in October, or ending October 2nd, they had $282 million of revenue. If we look at their net income, oh dear, they also lost $12 million that quarter. Oh dear, actually they not only lost $12 million that quarter, but they lost money last year. They lost money in the 9 months ending this year. They lost money in the 9 months ending. Okay, Red Robin's actually not making any money selling hamburgers. Okay, let's go to a different company like McDonald's. What do we have here? So take a look at this. McDonald's is an interesting one. They make the bulk of their net income from franchised restaurants. See, in company-owned restaurants, they have a gross margin of only 16%, which means basically if you go $100, you go down to 16% before you actually start spending money on like your corporate offices and your advertising and stuff, and that would bring your net even lower. So if they were only a corporate-owned restaurant chain, McDonald's would probably be in the same boat as Cheesecake or Red Robin. In other words, negative. In fact, if I subtract out their franchising revenue and franchising costs, they'd be negative $300 million of income, okay? So the restaurant business itself, not very profitable. But McDonald's isn't negative because they have the franchise model, which has an 83% gross margin because of the McDonald's brand. In other words, the individual franchise owners, the individual restaurants are the ones who get screwed. It's the franchise model that's profitable. That's where the money is made. In fact, look at this. The net income for McDonald's is nearly $2 billion on revenues of just under $6 billion. That is 33% net income. Why, folks? Because they use the franchise model. They don't run the kitchens. They don't make the food. They don't deal with the customer complaints, the fear of spitting the food. They don't deal with the returns. They don't deal with all of the garbage that goes into running a restaurant. Running and owning a restaurant is a terrible, terrible business model. But MrBeast could actually be onto something with an IPO of BeastBurgers or Feastables, because guess what? And I don't know this about Feastable, but I know this about at least BeastBurger, and I'm assuming it about Feastable. They aren't actually making the food. They're selling you the brand. They're selling order flow to restaurants. And that is actually a profitable business model. Now, MrBeast claims that at one point he made about $3 million from BeastBurger in 2021. And as you can see here, this Forbes article suggests that $3 million of profit for MrBeast and probably his, well, it actually says his stake generated about $3 million in 2021, represents just 4% of the company's sales that year. That's honestly, though, actually pretty dang good, because think about it. None of the stress of running the restaurants, and you're taking 4% to the bottom line potentially as the franchise fee, although I expect the franchise fee is probably closer to 10%, and maybe MrBeast takes 4%, and the other people who operate the app and everything take 6%. So really, all MrBeast has to do is throw his brand on hamburgers made by other restaurants and an app made by an outsourced company, and boom, you have a revenue stream for BeastBurger. Now, if BeastBurger were to IPO, you would expect that that would be a partnership between the brand that made the app, BeastBurger, and MrBeast. And so you would have an ownership in that franchise model. That franchise model, if they can keep their reviews up, which right now are kind of mixed, could rival a McDonald's in the future. However, you have a little bit of a risk factor. The big lines come to In-N-Out because they keep prices low. The average cost of a MrBeast burger is between $9 to $11, whereas the average price of a McDonald's Big Mac in the United States is $4.65, less than half of the price. So there's definitely a lot of competition in this space, and there's also a risk that what happens if people multiple times try BeastBurger and local restaurants are either doing the orders wrong or people don't like the quality of the ghost kitchens that were chosen, and then they don't come back. I hate to say it, but I've got a 7-year-old and a 5-year-old that love MrBeast. They watch his videos. I'm a big supporter of them watching MrBeast videos, and I'll watch MrBeast videos with my kids in bed or on the couch or whatever. We've tried BeastBurger a few times, and we personally wouldn't try it again. But could the IPO of MrBeast's BeastBurger be wildly successful? Maybe not in this market, because I wouldn't recommend anybody IPO anything really in this sort of market, but could it potentially be successful against a McDonald's? Absolutely. The franchise model is where it is at, and so I'm a big fan of this.